Michael, it's great to have you. You know, every retail snapshot is complicated, and this one has weather, it's got SNAP, it's got tax refunds, it's obviously got the consumer mindset. Is Foot Locker a decent lens or not?
I think the lens is that discretionary retail is already in a recession, Carl. We've seen that consistently in the reports that materialized this week, and it's likely to get worse before it gets better. In addition to all of those factors that you mentioned, there's going to be looming headwinds in the months ahead. Number one, in August or September, those who have student debt are likely going to have to start to repay those loans. That alone can be a $7 to $8 billion hit to consumer spending per month. In addition, the best estimate we have is from the San Francisco Fed, who noted that excess consumer savings has fallen from a level of about $2.1 trillion at its peak to now $500 billion. That's likely to be exhausted as we get into the back half of the year. And those factors are going to put what is already a difficult situation for discretionary retail into an even further difficult spot.
So I know some of your favorites include Walmart and Dollar Tree. Is that on the notion that they are going to continue to get some audience from income levels higher than maybe history would suggest?
That's right, David. Ulta, is in a good spot, if only because it's benefiting from a unique trend, really the micro influence trend, where you have folks on things like TikTok and Reels identifying new beauty products that are driving a lot of innovation and newness in this category. That's a unique trend that should be able to do well independent of the macroeconomic backdrop. Dollar Tree, another really interesting story here that we like a lot. It's at the right place at the right time because they help consumers stretch their budgets. Plus, there's a new management team that's come in the last few years, made copious amounts of investments in trying to improve the performance of this business. Incremental shareholders from here can reap the benefits of those investments as the company harvests a return. So those are two names that we're paying particular attention to next week, and we think are compelling ideas.
You know, finally, on the shrinkage issue, Michael, has it ever been worse for the industry? And if, in fact, there's progress made, is it going to lead to some unexpectedly more profitable quarters for some of these companies?
Well, first, David, hopefully my pitch right now is as good as your pitch was yesterday.
Mine was not as good as I wanted it to be, but thank you, Michael.
Good.
Yeah, it was fun.
The second issue of shrink is worse than it's been for the retail sector. And at some point, this will be addressed, in our view, either through collective action from the retail sector that puts pressure on municipalities to enforce the regulations greater than they are today. Different actions that retailers are going to take to add labor to the store, put in technology to help prevent theft. Or third, if those two first things don't work, ultimately you and I as consumers are going to be paying the price for this because they're going to pass along the higher costs in the form of higher retails. Yeah. So eventually this will get worked out. It is an issue right now, but over the long term, this should find much more support.